Brendan, how are you, sir?
Hey, happy Friday, Matt. It's always good to see you. How are you doing today?
I'm good. I'm good. You know what I did today? I've done a speed awareness test because I'm a criminal. I'm speed freak. I did 24 miles an hour in a 20, and I got caught. And I'd spent 3 hours listening to some droll creature telling me how awful I was. So I'm in the
Living on
mood
the
for
edge.
this. Living
Yes,
on
I'm
the
living on
edge.
the edge, my friend.
I'm in the mood for this. Right, we
Good.
need some good news, is what I'm saying. We need some good news. Look, what we're going to do, we're kind of going to maybe meet up on a kind of more regular basis and talk about the world of royalties. It's, I think people kind of dip in and out of that, but they don't really kind of understand how things come together. And I think with a bit of M&A that's been happening recently, people are leaning into the space. So,
Yeah, a lot of M&A.
we, should we talk about? Let's just talk. Let's just talk. So, I mean, so what's the story that kind of caught your eye over the past few weeks?
Yeah, I think there's quite a few stories. I think the big one obviously got to be Sandstorm Gold and Royal Gold's acquisition of them, US $3.5 billion deal. You look at Sandstorm annualized revenues, based off their last quarter, it'd be about 200 million US. So, you're paying, kind of 17 times cash flow. But that's, it's exciting. I mean, Sandstorm's been around a long time. They're one of the bigger, royalty groups. You haven't seen one of those guys, kind of fold into anybody in a long time. And I think it just kind of talks to the broader, consolidation in the space and definitely the growth in the space that you see. I mean, there's been a lot of deals in the last little bit, Origin, Triple Flag. You look at Franco Nevada's $1 billion deal and the Cote Gold mine. There's a lot of new companies that are coming up. So there's just this last week, Eagle Royalties announced a deal with a private group to create a new precious metals royalty group. You had Versamet just kind of quietly went public, kind of a unique way just about a month ago. That's the old Mavericks Metals guys, Dan O'Flaherty and them. And so, lots of stuff going on in the space for sure. It's, I think, an exciting time to be in.
Well, there's a lot of cash being generated. Seems to be at the root of all this. Thank goodness. I mean, got the kind of the rise in the gold price over the last 18 months has kind of been the catalyst that a lot of these guys have been waiting for sure. I mean, I meant to say, what's your take on the with the Sandstorm deal? They also obviously picked up Horizon Copper at the same time with nearly 200 million bucks cash.
Yeah,
I think that was a nice sweetener.
I think that was probably a throw in, to be honest. They had quite a bit of debt there already. They had a couple assets that were interesting, but I think that was kind of more of a throw in. I think the real prize is definitely Sandstorm itself. And, there's over 200 royalties there. I know their portfolio, pretty well. And they've got a lot of really good assets in there. And so I think that was a brilliant deal. I think, right now, Royal Gold's acquisition of Sandstorm probably deal of the year. And if you compare that, I think the Franco Nevada deal is a really good comparable of that. When you're looking at the numbers, Franco Nevada is paying basically $1 billion US. So a little less than a third, but they're only expecting about 67 million US cash flows a year from that. So they're paying about 15 times cash flows, but it's all one asset. And it's just kind of funny because they've just been burned on that. With the Cobre Panama mine, that was another huge deal they did. All in on one asset. So I really love the Sandstorm deal myself personally. I mean, that's an all stock offer. You're gonna get synergies between the two portfolios. Yeah, Royal Gold's basically doubling their portfolio, so it's you're hedging that risk across 200 different assets. So I think I really like the Sandstorm deal relative to what you're seeing out there.
Yeah, well,
Um,
I think that's going to look to close by the end of the year. Typically, I assume long-suffering Storm shareholders will be delighted at the news, obviously. But here's the thing: when these sorts of deals happen, there's you got to close it, but then you got to do this kind of integration component, right? Because not everything is going to fit nicely into the right boxes, as it were. Do you think you'll see a few of the assets spin out like quickly, or do you think they could obviously take their time? I suspect, but is there some upside for others at some point down in the future?
yeah, I think so. I hope so too, especially when you're looking at all these groups being precious metals focused, and they have a couple non-core assets that may fit the critical metal space. So I definitely think that could happen at some point for sure. But in terms of like consolidating and integrating stuff, I think that's what makes royalty so interesting and such an acquisition hungry kind of territory. is that it's super easy. These royalties, they cost us nothing to hold. We don't really have too much administrative work that we need to do. We don't need a team of people on the ground in any of these places to monitor them, to watch over them. And you're typically looking at teams that are pretty small. Like Electric Royalties, I'm still the only full-time management, that we have in the company. But Franco Nevada, they're, what, $40 billion company. I think they've only got about 25 people there. And so from a people perspective, it's not that difficult. And from, an asset perspective, I mean, definitely, maybe some tax considerations and stuff in terms of how you hold those royalties. But that's about it. And so they're very easy to, kind of consolidate, integrate into your company and, ultimately become, cash flows for you down the road. But it's way different, I think, than if you had an operating business. If you had operating mines in different places, you might have, teams of 100 people in each. And, then it definitely becomes, more difficult. But, that and the fact that, these royalties, they're time consuming to put together, it can take, 2, 3 months to put together one royalty deal. And so I think when companies look at, hey, I can add 200 royalties, in one transaction, they've just saved themselves, well, it took Sandstorm, 15, 20 years to get there, right? So I think that's another big part of it too, why you see, acquisitions being a really kind of core means of growth in the space. I think you're going to see that continue for sure.
Yeah, it's interesting, and and there's a transaction that kind of happened earlier. Well, certainly it closed earlier this year. It was probably announced, I think, end of last, which was the kind of triple flag acquisition of the Origin royalties. It seems a long time ago now, but just want to sort of compare that with the Sandstorm deal. I mean, I don't know if you can remember that far
Yeah,
back.
no, no. So I mean, that was, yeah, 250 million US cash deal, triple flag for Origin. It was kind of framed as the acquisition of this one royalty, and the rest of the company. And that royalty is actually kind of interesting. I mean, if they're looking at that as the main source, you look at the resource on Franco Nevada's Cote Gold mine acquisition. It's kind of comparable to the royalty that Origin had. Not in production yet today, but you can kind of see where triple flags like, okay, I see this royalty is going to be a Cote kind of royalty in the future. We're paying 250 million US today. Franco's, they paid $1 billion to get in, right at the production moment. And so there's a little bit of a comparable there. But again, I think you've seen, even going into last year, you had the acquisition of a group. Oh my God, I'm blanking on the name right now. They've been acquired by Deterra, and they're just very similar. Both groups had they're about $250 million cash deals. They had revenues kind of in that 8 to 10 million range. We have royalties in our portfolio that could get us there, on their own. So, one of those kind of come into production, and then kind of paying up, a little bit earlier, than like Franco Nevada, right, where they're paying 4x a little bit further down the road. And so I can kind of see why they did that, they're spinning out a bunch of the stuff. So it really kind of is for that royalty, a little bit longer dated, but if you got 250 million cash to spend, I guess you can kind of choose how to do it. So I would have bought us 5 times, but I don't have that
Yeah,
cash to do so.
your day in the sun will come. Don't worry about it. And and obviously Eagle royalties and Summit royalties, coming together.
Yeah,
That's kind of interesting. But I thought the one that was really kind of took my eye was the Tether coming into Elemental Altus, right?
yeah,
Who saw that coming? And what does that signal to the market? I've been talking about alternative financing needing to kind of step up, where retail's gone away. Conventional equity seems to have dwindled in the past 3 4 years. A lot of the companies have veered away from mining, and suddenly you kind of got this Bitcoin aggregator company Tether coming out. Oh, we want physical gold. What did you make of that?
yeah. Well, I think when you talk about real assets, I think metals is like the premier asset. I mean, you can't make this stuff up. Some of these deposits, they take millions of years, right, to form. And so you're not going to be able to go and just farm some more out back. And so there's a limited amount, and I think definitely with gold is one thing, and you see all these different governments and all the tariffs that are flying around, and what's that going to do to your currency? Well, obviously governments printing out too much money, finance themselves via debt. So I think there's I think money itself definitely is losing value, always for sure. And so when you look at any metals, whether it's gold or, copper, I think these are great places to store value. And I think, definitely as you move forward. I think groups like that too, like, groups that are in more of that digital, kind of space, digital assets, those groups definitely, I think, are going to take more of an interest as well because, they're starting to realize that everything that they do, and artificial intelligence and all the platforms that run I mean, you're going to need more of our metals, critical metals, copper, those types of things. And so I think there's definitely a renewed interest, from people outside of the space that maybe haven't been there for 20 years, that are starting to finally look at materials, metals, mining, because it's going to become a much bigger part, of the global economy, I think, as we move forward here. But basically a sector that didn't exist, right? 10 years ago, clean energy metals. And you're talking about cannibalizing the oil and gas sector, which itself, was kind of 3, 4 times bigger than the mining sector. So I think it's definitely going to be a bigger theme here as we move forward.
Well, I think it's got people excited and also more importantly thinking differently, right? So Tether, what are their annual revenues? 4 to 5 billion a year, that kind of level. Junior mining companies just don't have access to those sorts of balance sheets or that sort of capital. So I think
Yeah.
we're talking the game of alternative financing, but usually what that means is some kind of death spiral or convert or something like this. This is like real hot, heavy money coming into space, and that kind of, I guess, high margin, low overhead, scalable business model also perhaps worries about the downside somewhat, like you say. Having exposure to the gold upside without the mining risk, like, might be appealing for a very small part of their portfolio. It may be inconsequential to them, and maybe this isn't a big deal for them, but for the mining sector, it definitely is.
Well, yeah, I think the mining sector especially leans itself to royalties, especially if you're a new investor coming into the space. Just because it's so technically challenging. Like any single project, there's 100 different things that kind of have to go right to get to production. And so your average investor coming in really isn't equipped, to kind of make that, call. And they usually are single asset companies, and so you're really all in on one asset, one commodity, and it really has to work out. And so oftentimes it doesn't, right? And you've had a lot of money come into the space and get wiped out. But that's why royalties are perfect, and especially for mining, because it's really capital intensive business, right? So, a lot of those shareholders end up getting diluted down to nothing because they keep having to put up capital at low share prices. Royalties, we kind of dodge that, right? We're always going to have that interest in the project that costs us nothing to hold, and diversification. We're like that Sandstorm acquisition versus Franco's Cote Gold mine. They're getting 200 royalties, and so there's royalties in there they're probably getting zero value for today that might end up becoming much more valuable. And you just don't know, but you're diversified, and that's really, I think, the key thing for people coming into the mining sector. And so royalties, yeah, just a fantastic way to play this space, specifically the mining space, I think. But royalties have been, used by family offices and, very wealthy groups to store value for a long time, and across various industries, whether music or, biotech or, you name it, oil and gas, I guess, more traditionally. But definitely something that people understand.
No, and I guess it's not really a kind of speculative experiment for them. I think thinking about after listening to you, it's like they. You think about the envy at which we've all looked at these sort of Bitcoin companies and gone, how in the name of all that is holy do those valuations get created? At the same time, these guys sitting in the corner saying, well, actually, we kind of want to have this kind of asset-backed stability as part of our portfolio. And you wonder if they're going to do more and more of this. And I guess a lot of CEOs are hoping that they definitely do that. But yeah, well, we should see what that does for the kind of broader sector, impact, and how many of these other mid-tier royalty companies put their hand up and go, "Me, please, sir."
Well, yeah, I think quite a few, honestly, would be probably saying that. But yeah, I think it's definitely interesting. I mean, let's be clear, like the material sector, the metal sector, mining sector, is beaten up. I think if you were going to look around, I think the S&P what just hit like new highs, in the last couple of weeks, as it usually does. It seems like continually. The metal sector has been struggling. The mining sector, you look at a lot of the valuations, you've seen metal prices double, in some cases over the last couple of years. Gold's up, significantly, and valuations really just have not caught up. And so, Yeah, I mean, you've had a few groups to make those investments like Tether, but that kind of broader, investment hasn't come yet. So I think we're definitely the most undervalued sector out there. And that's why I think the big push, you're going to start to see groups really look at metals. I mean, you've got a kind of a 10-year, good looking forward. And you've got, probably 5 years where we've just been kind of an historical, kind of sludge, as it were, the valuation wise. And so, yeah, I expect it's, smart money coming in first. And, those guys obviously have some cash. And so, it's a good move. I'm not surprised.
So, I mean, how do you set yourself up for, or put yourself in a position like you're one of those companies that you got to build something up here to kind of make yourself attractive to be in this kind of position, right? That's what I suspect your shareholders would want to see. But how do you do that? What are the building blocks that you need to put in place?
That's a good question. So we've already put a lot of the building blocks in place. We've already got 43 royalties. And, if we were just kind of sitting on our hands here, for the next 4 or 5 years, we see that getting up to, a significant amount of cash flow. Let's just say we could get up to maybe, 20 million a year. And we don't have to do anything for that, right? So, like we don't have to put up any development costs, capital costs, cost overruns. So a lot of that's already kind of built in. But we do want to add a couple more pieces, I think, because obviously we don't want to wait just 4 or 5 years to get there. And we're very close to cash flow positive. But my plan, our strategy really is to use private equity money. There is actually a lot of private equity money out there in the space that is looking to do these kind of deals that we've been putting together for the last 5 years. So I think we're kind of uniquely positioned, one of the few groups that has been able to put together royalty deals in the clean energy metal space. So my plan is really kind of go all out on that side, where we're putting a lot of deals together, in the background, and basically using and coordinating with private equity funding, because that market there for, on the equity side, for junior mining companies, for the TSXV, I think kind of generally is just really weak. And so, I think my opinion is definitely private equity money, big capital out there that, understands these projects a little bit better. And that's kind of our growth plan, right now. So we're looking at kind of, a few royalties that way. Kind of similar to what we did with, the Middle Tennessee Zinc Mine royalty that we bought. We brought in Sprott, royalty and streaming. They put up, 100% of the cash, about 13.5 million at the time. And they got 75% of that royalty. We got 25%. So we're looking at deals like that, primarily. I mean, corporate M&A I would love to do, but I think we're just right now, in my opinion, we're the most undervalued royalty company out there. And so corporate M&A is not a good strategy, to do when your valuation is like that. But so our plan is to use some of the bigger capital out there, keep doing deals. We've already got 43 royalties, so a lot of building blocks in place. But it's a grind. There are royalty groups coming up, but it is tough to get to that, portfolio level and get that cash flow positive level. But it's been a 5-year grind to get there, so we're close. We're going to get there soon.
Right. So you're saying basically in terms of royalty originators is probably a more efficient way of allocating the capital rather than trying to say we're going to be royalty aggregators at this point. Well, certainly at your stage of maturity. But for others, obviously, as we discussed, M&A is happening out there. I'm just kind of interested in, it seems to be obviously still predominantly, and I guess in this environment, gold has done a lot of heavy lifting for people over the last 18 months, and the gold focused royalty companies have done very, very well as a result of this. When you're obviously, your battery, your electric royalties, your battery kind of focused, does that kind of commodity exposure need to diversify further? Do you need to bring like gold in there, or do you think we're actually going to start to see the likes of copper, silver, uranium, manganese, coming through?
Yeah, well, I think a lot of these metals, when they do have their run, are going to take people for a surprise, just like they did when lithium went up 19 times. I mean, can you imagine if gold went up 19x, over the course of a year? So that's the kind of upside that you have in a lot of these kind of lesser known metals like manganese with tin. And you look at copper. Copper's done very, very well, over the last kind of year and a half. I mean, you look at historically, copper was at 250, and we were using that in all of our models for probably 10 years. And so to see copper, hovering around $5, I mean, it's definitely a new environment. Copper is something that we're very bullish on. Tin is also something very bullish on. And so yeah, I think the pricing upside is really interesting. Yeah, in terms of groups out there, I mean,
everybody's been precious metals focused primarily. I mean, that's all the big royalty groups started that way. You look at investment into the space, there's definitely over 50% just going into gold mining, right? So the major draw of investment has historically been gold mining. But like I said, critical metals didn't exist, right? 10 years ago. So the amount going to it was, pretty much zero. But you're seeing that change. There are a number of royalty groups that are, definitely interested in some of these metals. I think copper is probably the first one that's going to make that. Arguably, a lot of these guys like Royal Gold, they did that $55 million copper deal just ahead of that Sandstorm acquisition. So they've been doing a lot of copper stuff. I think you're seeing a lot of those guys get into copper. There's not going to be that much gold opportunity out there with you have so many royalty groups out there. And so I think the new entrants are going to have a really tough time competing and trying to get royalties. So from that perspective, I love where we are. We have very, very little competition. But yeah, that's going to be very tough. When you got Franco Nevada is paying $1 billion, for one royalty, there's a lot of groups that probably did participate in that process that, had bids probably half of that. And so, yeah, that's the biggest challenge, I think, is because they have so many groups there. But traditionally, gold mining, as crazy as it sounds to me, still soaks up the majority of the capital that goes into the space.
Well, I'm trying to think. I've always said like you need royalty and streaming in your portfolio somewhere, and it's kind of patience game in a lot of cases. But what I'm trying to, as an investor, I'm trying to understand is this kind of valuation gap. You look at the kind of multiples on the large royalty firms versus the smaller ones. You're talking like 15 to 20 times versus 8 to 12 times. Is there a game to be played there?
Oh, there's definitely a game to be played there. I mean, I've been pretty vocal about the fact that there is valuation discrepancies, especially on the TSX, just because you have, liquidity issues. There's, maybe some, short sellers and that kind of thing. But so there's definitely valuation disconnects. And I think a lot of it happens very quickly, right? We have royalties in our portfolio, boom, that comes online, and all of a sudden it's a different world tomorrow. If you look at what these guys are paying cash flow wise, I mean, they're paying, 15 to 17 times cash flow. And so you can see, we have a couple of royalties or major royalties, one or two of those comes online and boom, all of a sudden, we have, cash flows equal to our market cap. I mean, it will be, definitely in a different place. So it happens very quickly, I think. Once you get one of these, two of these in, once you get to that cash flow positive, space, you've taken all the risk out of the portfolio. Then it's just things are happening for you. I don't know the exact number that we've had invested since we bought all our royalties at this point, but I think it's been over 750 million, gone into the ground that we didn't have to invest. I mean, all advancing our assets. And so once you get to that point, I think it's a very quick, transition. And so, yeah, there's definitely a game to be played. And I think, picking those groups out there that are right at that stage, about to, kind of hit that next level, like in electric royalties. Yeah, there's some opportunities out there. I mean, I don't think any bigger than electric royalties, but there definitely is a lot of room to play and find value.
Right. It was, yeah, for sure. And I'm kind of interested in when big companies get acquired or they merge, whether or not, as you say, because you got a very low G&A, very low headcount. I'm just wondering where the savings are. Where the upside is. Is it just you slam the two companies together and you go combine roughly what they were both doing, and that's what you're looking at going forward? Or are there sort of genuine savings in that kind of integration process? Is there, again, would I as an investor be thinking, well, I should look at the kind of those sorts of re-ratings after a successful M&A, that kind of integration ramp up period. Does that work in royalties?
Yeah, well, I think you have to look at the deal for sure. I think in any case, with M&A, but synergies, you're right. There is not a huge number of synergies that you get out of the deal because you're not really combining. There's no operational stuff to really put together. But for me, the biggest one is diversification and just adding more diversification. I mean, now they're basically doubled their resource base or their royalty base. So you're looking at your cash flows are coming across 400 different assets. You also have a lot of those assets that, probably aren't doing anything today that are going to start to generate cash flow potentially at some point down the road. And so you've kind of given yourself a lot more, development growth in your pipeline as well. And so for me, those are really the key ones. Just that the extra diversification, you've now reduced the risk even further. If your risk was spread across 200 different assets that you're, depending on to contribute, now you're depending on 400 assets, right? And so, especially in the royalty space, especially in mining, where sometimes you have a royalty, you might think, hey, this is nothing. And all of a sudden, boom, tomorrow, they had a great drill result, and now this project's, catching the steam. And we've had projects like that where they've raised 75 million, over the course of 6 months, and then all of a sudden they double the resource. They've got economics, and they start to go. So I think that's really the big upside, to doing that. And that's why I love the Sandstorm deal, kind of relative to Franco, is it's, you're kind of getting the same on the cash flow side, relative value, but you're diversifying it across, 200 assets versus one asset. So I think that's the really big benefit, is that a lot of that value that's going to be captured is kind of unknown, down the road, but you've now got another 200 opportunities for it. And so I think that's the exciting part.
Well, it is. It's that. It comes like that adage. It takes money to make money, right? And obviously throwing off money for fun at the moment, they can ramp up how they attack some of these things, and more importantly, some of the projects and assets lower down in the portfolio, which are sort of development plays. Maybe they can be, that cash could be useful to some of those companies, not just as a royalty, but maybe it's an equity position, or even into the at asset level. Because what do you do with the cash? You can do dividends, you can do buybacks, and maybe that's safer. But I wonder, in this new paradigm that we're in, if some of these development companies can't access the capital, then who's going to come to play?
And that's the funny thing, right? Because you look at the space, 80-90% of the groups are precious metals focused only, and so that takes away most of the groups, right? So but outside of that, the number of groups that actually originate deals, actually invest with companies, give them capital to move their projects forward, you're probably looking again at like at least half of those that remain. And the junior side, it's probably 75% do not do that, right? So yeah, there's only a few groups out there for some of these deals that we're talking on. I feel like I'm the only guy, in the room, in the world, maybe, right? It's like, oh, we need a royalty on, tin or manganese or something, and they'd probably call me, right? Because I'd be the guy that's interested in that. And so, and actually, we put deals together, right? We do originate, we do that. That's my background. And but yeah, there's, when you look at it from you eliminate 80-90%, just they only do gold. You eliminate another 75% because they don't do actual deals to invest in these groups. And then you're looking at a pretty sad market for groups that are looking for alternative finance. And that's good for us, because if we're offering something and there's a scarcity, then you're probably getting some better terms, like better terms than you would in gold. But yeah, it's pretty tough for the developers out there, and definitely, like, valuations are pretty bad across the board. So it's a market where royalties, I mean, there's opportunity right now for sure.
What do you mean by that? Do you think, when you say these opportunities, there's obviously assets. There's always assets. There's always like more assets looking for more money than exists. So the question is, how do you kind of put yourself out there as one of the quality assets to attract the real money? I'm not talking retail money. I'm talking big fund type money. Do you think the fund type money is looking for deals? Is that what you're saying when there's
Yes.
opportunities out there? They
Yeah,
are. Okay.
absolutely. I mean, and I think the funds are the groups that are probably getting the biggest interest from parties outside of the space to come into the space. I mean, if you're looking at big money that's looking to come into mining, they're probably going to invest with one of the bigger funds, I'd imagine, first, right? So like an Orion or those guys. I mean, they're going to be one of the first people these guys go to. And so I think that's probably what's starting to happen. You're starting to see those funds get a lot of inquests from groups outside the space. Hey, we want to invest here. And so you're seeing a lot of, pickup and desire to do deals. And so that's definitely one aspect of it. But in terms of the opportunities, it's kind of funny when you look at the clean energy metal space. A lot of the cases, it's like these are the one of a kind deposit. There might only be two of these, say, in North America, or one in North America, and they're critical metals. It's the only one. It's the most advanced. It might be maybe 2-3 years from production, but it's the only one, right? Like, so for a lot of this stuff, and we still kind of maintain that longer term view on opportunity, and we've been following those advanced projects, right? I mean, your average development timeline is 15 years. These guys aren't sneaking up on me, right? When, some of these groups we've been talking to for 3 years, and they're finally, oh, we're about to get our permits. We're about to finish our, feasibility study. So, it's a lot of bit of timing, and a lot of those groups have been moving projects forward. So you're seeing a lot of those groups starting to get to that kind of project financing stage where they're about to get into production. And they're best in class assets for domestic, right? Like all of our assets are, Australia, Europe, North America. And so when you look at that and you look at the space, there's just very few projects out there that can fill the gap, which is, kind of builds into our thesis on supply being really the biggest issue long term. But yeah, so it's kind of funny when you look at clean energy metals. I mean, gold, yeah, look, every project, you really got to look at the project and assess it. And they're all, you could mine gold anywhere, right? Up in those hills, it doesn't really matter. They do it everywhere. But when you look at the critical metal space, there's just way fewer options. If you actually want to mine this stuff, it's not like a billion deposits out there. In many cases, it's like I said, it's only one or two, for a jurisdiction like North America. So it's a little bit more exciting.
No, it's a little bit more exciting, and I think there's more exciting deal structures to come up. And we saw the one yesterday with MP, Man Pass of old.
Yeah,
US
Mountain
Department
Pass.
of Defense. You're going right, $400 million worth of equity, 10-year offtake, 70% premium for 100% of your offtake of NdPr. I mean, Mountain Pass have been struggling, let's be clear. Even for a company of their valuation, that was a super big deal. And again, kind of like the Tether deal, getting people excited about this kind of alternative access to capital. The fact that governments are looking at kind of, green metals, clean metals, critical metals. It started to this whole kind of decoupling from the East. We've been talking about it. No one's been doing anything, and I thought that was a heck of a deal there, and super inspirational.
Yeah, it's the first real sign of the U.S. actually taking control of their, mineral supply chain. It's kind of crazy because it has had trouble, in the past. It's not a huge investment necessarily for the Pentagon to be making, but to be able to actually lock up some rare earth supply, so China can't just cut it off whenever it wants. I mean, that's priceless, right? And so, they've started to notice that obviously rare earths. I think they should be noticing that across a much broader spectrum of metals, and I think you probably will see that. This is a deal that probably for most people in the industry, we've probably said you should have done this 10 years ago. But still, I'm not going to take away anything from it. I mean, brilliant. I think it's a really, positive move for the space, and I think you're probably going to start to see that, elsewhere. But like they haven't produced tin since 1985, and they've only got 2 tin projects in the United States that the USGS says might be potentially economically viable. We own a royalty on one of those. I'd like to say optimistically it's 7 years from production if you were to get going on it yesterday. And so there's opportunities like that I think they really need to get going on because it's a timeline. You got to kick it off. You can't go back in time, and you can't make up for the fact that if you didn't do work for 5 years, it's still going to take you those 5 years of work to get to production. So I think, great investment, very positive for the space, but definitely a lot more that needs to be done. And, they need to come in earlier too, because there's not going to be opportunities where we're financing stuff already in production. Those I think are going to be the easiest to see. And, so hopefully maybe we can convince them that they need to invest into. Maybe they'll watch this and they'll say, hey, he's right. We haven't had tin for 30 years.
Very likely that won't happen. Well, you put me in a good mood. Following my speed awareness course, so thank you for that. Interesting to sort of see what's happening in the royalty space. It's been a sort of interesting few years for sure, and this M&A was inevitable. And more is inevitable too. So, Brendan, appreciate your time today. We'll see you soon.
Thanks, Matt. Always a pleasure.